Good morning, welcome to the Phoenix Blue update on Wednesday the 15th of March, presented this morning by Tom Colley. Right, well, it's here at last. It is FOMC rate day. We should finally get confirmation that we're going to get that 0.25% rise in US rates that we've been, or certainly that the markets have had written into, well, priced into the markets for a considerable period of time. It seems like it's been a long wait. Here at Phoenix Blue, we won't be trading today. We believe that unless we get a hawkish statement and press conference, we're unlikely to see a huge movement in dollar strength, and we might even see a short-term weakening simply because of how long and how far in advance this has been expected. Okay, here's the news events for today, and this is the event 6 p.m. and 6:30 p.m. UK time today. We've got the FOMC economic projections, which only come out every second FOMC meeting. They will give us a longer-term view of how the FOMC see the US economy developing. We've got the statement itself with the Fed funds rate. Obviously, we'll be very interested in the wording of that, looking for indication of the number and possible timing of further rate rises. The market seems to believe that we'll get a 0.25% today, we'll get a 0.25% in the June meeting and a 0.25% in the December meeting for 2017. But obviously there's a long time and a lot of potential events to affect that. The press conference will always be significant. Fed Chair Yellen will read out the statement and then answer questions from the press. Again, we'll be looking out for hawkish comments, any sort of indication on how she perceives the US economy moving forward. Big day though, because overnight we've also got the same for the Bank of Japan policy rate, monetary policy statement and press conference. That will be overnight stroke early in the morning, and then we early tomorrow morning, potentially before you have chance to see tomorrow's morning update, we have the SNB, the Swiss National Bank, with their rate and policy assessment. Now, we rarely see a rate rise or any rate move from the SNB actually at the point of the rate announcement. However, we will again be looking into the wording, and then, believe it or not, later on tomorrow at lunchtime tomorrow UK time, we've got the Bank of England with their rate statement, press conference, etc. So we've got a stream of information. As I've said, here at Phoenix Blue, we won't be trading the FOMC event today. We will be aware of these three other central bank announcements coming overnight and tomorrow, so there's definitely markets we would be staying away from ahead of their individual announcements. Going back to the news in general, yesterday we had strong PPI out of the US. We've got first thing, or 9:30 this morning, average earnings and claimant count out of the UK, which will be significant. Then the US, for the US, we've got CPI, core CPI, and retail sales. Again, very significant, because one of the criteria that Janet Yellen, the chair of the Fed, gave when she gave the strongest indication of a rate rise at this meeting was that employment and inflation needed to stay on their current track. Well, employment's done that. We saw that with FMS, non-farm payroll, on Friday. Inflation has been doing so. Obviously, that's the first indication there, but there are a whole raft of inflation indicators coming around lunchtime UK time. If they were really poor results on those, which I wouldn't anticipate. We have seen some really strong results, particularly core retail sales last month. You see, we saw 0.8% last month. Forecast is only 0.1. The forecasts aren't particularly strong. So if we did fail to meet those forecasts quite dramatically, that could potentially affect how the Fed actually put together their statement or respond in the press conference, if not changing the fact of a rate change. Also this afternoon, crude oil inventories, crude's well down this week. There has been the rig count in the States is up. Last week's inventories were high, and stocks in OPEC countries were reported high overnight. So we are seeing a big downside move in that market at the moment. This evening we've got GDP for New Zealand, Aussie employment and unemployment, and then Bank of Japan and Swiss National Bank, as I mentioned earlier. Okay, so a quick look at the charts to see where we are ahead of the statement. Here's the dollar index. We've had a bullish week after a sell-off last week. Key areas, we're looking at this level through here, and to be fair, the one above that. This key level, until that's broken, we still have the potential of this head and shoulders pattern to play out. A break and close above that should put that possibility to bed, and we'd be looking to further long side on the dollar. Obviously, a breaker of any level higher than that's going to be more significant, and will probably require some pretty hawkish comments out of the Fed this evening. Yen, again, very much at a key level, 115.20, 115.30, the level we can see through here. We're looking for a break and close above that to reflect the same on the dollar. And then we have this downward trend line, but in all honesty, if we get the rate rise and any indication that we're going to get further rate rises later in the year, we should see this push through to the high side, and the central bank policy divergence bias that we have for the year as a whole should start to play out more strongly. The euro, obviously very much the reverse of our dollar index. The euro has been strong into the back end of last week, but sold off so far this week. Again, we've got a key level here that we would like to see broken. When that's broken, we've got the same this time. We've got inverted head and shoulders potentially there, a break of that. But this is a market which, because of the relatively hawkish ECB statement last week, because of events in the French election, also worth mentioning today is the Dutch elections, so maybe this evening we should see some feedback on that and see if we have any further worries in the EU with regards to the Dutch and their status within the EU. Over on the pound, well, a lot going on here. Theresa May and the government now have their Brexit bill through Parliament. They are authorised to issue Article 50 to start the 2-year process of negotiation to leave the EU. It was believed that that would potentially happen yesterday, immediately after it became possible. That clearly hasn't happened, and we expect it to hold out from actually triggering Article 50 until the last week of this month. But a lot of uncertainty. As I've said, we've also got a potential Scottish independence referendum vote in the news as well. So we can only see a short side in this market, maybe significant short side over the remainder of the year. But also we expect a lot of volatility because there are so many unknowns in the Brexit event. Okay, Aussie. Well, Aussie clearly short. We're currently in this channel here. We're testing the top of the channel and the level through here. We saw the Aussie capitulate somewhat the week before last. Nice short movement last week as well. As long as we get the rate rise and we get some dollar strength, we should see downside to this market. We're still holding this trade, and we're looking for currently targets around the 7,500 level down here. Clearly you can see we've got a stop pulled up here, we've got profits locked in, we've had profits off the table already. If we do get a movement from the dollar in the opposite direction, clearly we'll be stopped out, bank profits, and still waiting for further downside in this market. It will just be a case of patience in that respect. The Kiwi clearly below this trend line through here, unable to break this significant horizontal level through here. So again, we will be looking potentially for dollar strength to play out and look for opportunities from the levels marked through here to take this further to the downside. This has been the weakest, or certainly last week was the weakest of the currencies. We couldn't find an end of day entry to the short side down this movement here, unfortunately, but we do see the potential of these loads down here right at the bottom for this market. So still plenty of possibilities there as and when dollar strength plays out. One other market of interest today, the S&P 500. This is the weekly chart. I've drawn in this channel here. You can see how significant it is from this low here to the low, which was the election night. Clear top to the channel at the moment. We've broken out of that channel and appear to be retesting it. The result of the FOMC today may give us a break to the downside as we see A, inflation rising, B, potentially a path for higher rate rises, which would have effect on US businesses in terms of the cost of their financing. So we'll be looking for a break below this level so to trade to the short side. I don't necessarily see this as a big move or a collapse in this market, but that rate rise and a forward guidance of further rises should give us, well, gives us the potential for some pullback in this market through this very significant level here. Okay guys, that's it for today. There is a free trading event this afternoon. It'll be too late to take part in that. If you are interested in the next event, which will be held in London in about a month's time, please go to the website, just send us an email confirming your interest. You will have a logo appearing here to allow you to click through the website, also allow you to subscribe to these videos that come out before 9 a.m. every trading morning. Okay guys, so day to watch and listen, see what happens. Remember that we've got Bank of Japan, Swiss National Bank and Bank of England coming almost immediately after the most significant Fed decision. So protect your capital, wait for the markets to decide which way they're going to move and if they're going to move, and take that as a trading opportunity. Okay, thanks for listening, and we'll be back with you with the morning in the morning and discussing exactly what we've seen so far from that Fed event. Thank you and goodbye.